Jenny Bowling here with Pivot to Prosperity, brought to you by Pivotal Real Estate Investments, where we help our investors build wealth and income through commercial real estate that also improves communities. And today we have Trevor Oldham. And Trevor, thank you for coming on. I appreciate it.
Yeah, thank you.
I will do a brief intro and then let you fill in the missing links. Trevor came to me through podcasting, and he has been a podcaster for much longer than many people and specializes in that. And he's going to tell us about his journey, which you'll find very interesting, I think. And he's invested in some multifamily, self-storage, and notes, and a few things passively. And so, Trevor, why don't you take it away? Tell us how you got started.
Yeah, thank you. I appreciate that overview, and I'm looking forward to chatting today and providing some value for our audience. But my story really begins back in 2015. And it was at that time I was running a different company than I run today. And I thought it'd just be cool to start my own podcast. I was very into personal development and entrepreneurship back then. And I realized a lot of the people that I was reading the books that I wanted to interview them, or I just wanted to talk to them, I should say. But I realized I couldn't reach out to them and say, hey, can I pick your brain for 30 minutes? How many times a day do they probably hear that, the more successful that they get? So I would reach out to them and say, hey, I would love to interview you as a guest on my podcast. And I got a lot of people that I interviewed. I think at the time, I no longer run it, which I wish I was still running it. But at the time, I interviewed about 65 different people. And obviously not all of them said yes coming onto the show, but I was able to interview a lot of entrepreneurs and investors and just gain a lot of knowledge. But at that time, I was bootstrapping the company. So I was the one that was booking the guests. I was editing the podcast. I was doing a recap of the episode of the podcast. I was creating social media clips for the podcast. I was doing pretty much everything that went into it. I mean, I was spending an easy 5 to 10 hours a week to produce one episode a week with everything that got involved. Now, fast forward about 2 years, and I was still doing the podcast, but I was sort of getting just a little burnt out about it. I wasn't making any money from the company, wasn't making any money from the podcast. So I just started freelancing out to make some extra income on the side. And when I was freelancing myself out, I was just picking up contract gigs of people that needed help editing their podcast, needed social media clips, needed to find guests for their show. Basically everything that I had previously self-taught myself for the previous 2 years, that's now what I was doing. And even in 2017, the podcasting space was still in its infancy, I would say, compared to what it is today and all the podcasts that are out there. So it's fairly easy to pick up gigs. One day I started working with this turnkey real estate investor out of LA. She wanted to go out and get booked on podcasts. I thought, well, I've booked a lot of guests for my show. How hard could that be to get her booked on shows? Honestly, started working with her, started finding more people that wanted to get booked on podcasts as guests. And fast forward about a year, brought on that first employee because I knew if I wanted to grow, I had to have that employee. And then about 2 or 3 years later, finally got like a website down. Because I never expected it to be as big of a company as it is today. Kind of just fell into it. I mean, I'd started 3 or 4 companies prior to it, but this one just happened to be the one that made money and all the other ones weren't making money. So I figured, why not just roll with it? And then probably about 3 or 4 years ago, we just decided, hey, let's just go all in and working with folks. I say the alternative investment space, but at the time it was really the real estate space. And we're only going to work with people that are in the real estate space. And obviously that's a wide niche within itself. When you're just talking, you can think of all the different asset classes, and then you can think of who also helps in the real estate space. You have your CPAs, your attorneys, your cost seg specialists, even your whole life insurance people, if you're going down that route. So it was a whole array. And really that's how we built up the company over the years. And then because of that, like you mentioned earlier, about 2 or 3 years ago, my business coach I was working with, he was like, why don't you ever invest in real estate? You help investors get booked on podcasts. You're talking to them all the time. And I was like, I don't know. I never really thought about it. And that led me down that rabbit hole where eventually now I'm an LP in 4 different deals. And I don't know if I'll ever be active, but I definitely enjoy being passive for the time being and getting those monthly distributions.
Yeah, I think that's a great story. And, that's so much what I try to tell people. They can be busy with their life and whatnot, but LP stands for limited partner, and it's so easy to be a limited partner because, like we were talking about, you do your research and make that decision. Once you make that commitment, then you don't have to do anything.
Mhm.
So, it's smart to keep up with what's going on, read the monthly or quarterly reports, but yeah, as far as being able to do your own thing in your busy life, it's way easier as a limited partner. But yeah, so tell us about your first investment then.
Yeah, most certainly. So it was a very small investment. So I guess to preface it, the leading up to it, I believe it was June of 2022 now, or July of 2022. And I made a goal for myself. I want to invest by January of 23. So I gave myself about a 6 month runway to get into that first deal. And I just started interviewing different operators and sponsors that were out there. I think I talked to about 25 to 30 different people before I was ready to invest with them. And early on, I didn't even know what to talk to these operators or these sponsors about. I would hop on the call and they would say, "What questions do you have for me?" I'd be like, "I don't know. What questions should I be asking you?" I was very, very basic down to what's the difference between a 506B deal and a 506C deal, a non-accredited versus accredited deal, not even really knowing what that means. So I mean, when I started, I was fairly new at it, but I just started interviewing all these different sponsors. I was reading different real estate books, like one such as like The Hands-Off Investor by Brian Burke. That goes through, that's very good for if you're a passive investor. I got a subscription. I believe it's called The Real Deal. It's not all just real estate investing. It brings in a lot of the real estate agent brokerage side of the business, but I find it's helpful when it comes to real estate investing per se. It talks about different operators and sponsors and was just soaking up all this knowledge. And so basically what happened in October of 22, when again I thought I was going to get into that first deal in January 23, and there was this mortgage note fund, and it was funny, the minimum investment, it was so small, it was like $500 to get into it. And it wasn't like on Crowd Street or one of those platforms. It was directly through their company, and they raised the minimum, I think it's 5K now, but I put the $500 in. I think I got, it was like a 8% annual return paid out monthly. So I get like $3 a month on that investment. But it was like I got that first investment. I was like, oh wow, like I can actually do this. And I was like, okay, now I want to look for my next investment. And then what happened with that one is I came across a triple net lease offering. And this is someone I had spoken back fairly early on, and I liked it. It was very simple. It was 7 to 10% annual return. There's not going to be a ton of appreciation on it because the buildings are going to be your corporate grade A tenants. So you have like your Dollar General, your AutoZone, a vet office. So it's almost like a fund of 5 different properties put in together, which is nice. So I knew I wasn't going to make a ton of upside, but it had that monthly distribution. And I invested with them. I believe it was that November because I could get 100%. It was still when we could get 100% depreciation on what we invested into. So I was like, well, instead of me waiting for January where it's going to be knocked down to 80% at the time, why not do 100%? Why not get 100% of it? And again, I wouldn't invest just in anything just for the tax benefits, but I did like that at the time. So that was more in that bigger first deal that I got into was investing with them where it was like a 25K minimum just to get started with them. Eventually I went back and this past February I put in 25K into into the mortgage note fund. So now I bumped up my investment from the 500 $500. I mean, they've been very consistent, but $3 a month isn't going to do a whole lot. But it was almost like just making that initial investment and getting that first distribution, even though it was very, very small. It's like, okay, like this is actually a possibility. Obviously, investing 25 or 50K into a deal is a whole different beast, but I just, I don't know, it like switched that light for me. I was like, okay, like this is actually something that's possible. I could actually be getting a monthly distribution. Again, so small, $3 a month, but it was like that was the first time I'd ever invested anything outside the stock market, and sort of just got me started on it.
Well, and you were what, just 3 years out of college? Two
Yep,
years out? Yep.
yep, exactly.
So that's phenomenal because many, many people take decades getting to that point. And you took a nice small amount, did a proof case, found out
Mhm.
it really does pay back. And yeah, it's good. It's excellent actually that you did that. And I bet a lot of people are braver for it, right? Do you share it
Mhm.
with your friends and
Yeah,
family? And
yeah. So
yeah.
trying to get the friends and family to invest, but I would say I joined this community. It's called Left Field Investors. So it's a really good community for folks that are passive investors. There's a lot of it's almost like an online forum per se. So
Did
it's
you
very
say
nice.
left field investors?
Yep, Left Field Investors.
Oh, bluff.
Left Field.
Oh, left, like left field. Okay.
Yep.
Interesting.
Yep.
Okay.
Yep, and it's a really good community. And I'd found that because of that, I was able to meet a lot of other younger investors like myself, and I was able to steer them into investing with the company. Not that I was like raising capital or anything like that. It was more like, hey, I got started. I think if like you're younger and you don't have a 25K to put into a deal right now, and I think back when I was joining the group, the minimum might have gone up to 2,500 or 2,000. I think now it might be 5,000, but yeah, it's a very small number compared to 25K. But I'm trying to get my friends and family to invest in real estate. And something that I had done is through the left field investor communities. Me and a group of 10 guys, we got together and we put in 5K each into a deal. So now the deal, we got to the minimum 50K investment. And part of the group, we had met for like 6 months, and we were checking out a new deal like every 2 weeks. We are all non-accredited, so it was just nice to get together and learn from each other. But that's sort of what I'm trying to do with my family and friends, trying to convince them. And it's hard because no one's ever invested in real estate outside of myself and my family. I was the one that took the plunge and invested in it, and now I can see these returns. I can see like when I get that K1 at the end of the year, yeah, I made a decent amount of income on these investments, but because of the depreciation, I don't owe anything, at least right now, potentially in the future. But at this given point in time, I didn't pay anything on these investments. So I try to tell them that. So trying to see if I can get them to pull them together where we just each put a little bit in, where I think it's harder for someone that doesn't know as much as like myself, or someone that hasn't been in the space a long time, like friends or family that haven't delved into it as much. 25 or 50K might seem like a lot to them. So I'm like, okay, if we can get together and we can each put in 5K, form an LLC, we can go out there and invest in a deal similar to what I had done with the group. So that's currently what I'm working on, trying to convince them to do it. Because I mean, for me, I see the benefits of it, and trying to convince them, especially like my wife, trying to convince her to invest in real estate. I'm like, you see, like, you start off small and you start to get these little distributions. But now that I'm into like my fourth deal, these distributions really start to add up. And then you can work back the distributions on your monthly expenses, and you realize like, and you start to run the numbers and you realize, oh, I don't have to wait till I'm 59 and a half, potentially retire. And I say 59 and a half, just going after your IRA and your 401k accounts, where now I have access to the money before then because I just invested through a high yield savings account. And that's where I put the distributions coming in. So I can use that money if I choose to want to switch. Let's say I want to sell my company and get a job somewhere else, or I want to just sell the company and just spend more time with our daughter, just different things like that. Or if I'm like, this is too stressful running a company, and which can be sometimes, selling the company and doing something else. So it just gives us that flexibility. So yeah, definitely trying to convince the friends and family aspect of it to invest in real estate. I mean, I really enjoy it.
Yeah, and it can really give you some additional income stream and double your wealth
Hmm.
quickly. It's so often, especially the last few years that were unusually great.
Hmm.
People were doubling their money and thereabouts or more every 5 years, sometimes 3 years. So that's attracted a lot of people to the business. I want to go back for a second, though, and unpack a little bit of what you said. You had referenced accredited investors, and for the listener that might not know who that is, basically it's people that are the main two criteria are making 200,000 a year or greater for 2 years and on track for a third, and 300,000 if they have a significant other or somebody they're filing jointly with, or have a net worth of $1 million or greater, excluding the principal residence. Now, if you own a company that has enough revenue, that's another way to be accredited.
Hmm.
So build your podcast company up to be big enough, right? Right. Yeah. But anyway, so yeah, so if you're not accredited, then you have to go into the 506B syndications, which are the friends and family is what they
Hmm.
were generated for. And as a result, then there's up to 35 sophisticated investors. You have to be sophisticated enough to understand risk and real estate and all to participate. But you've obviously, after interviewing so many operators and syndicators, you've gotten quite knowledgeable, it sounds like, to me. So that's awesome. Now, as far as we talked briefly, I think more off camera, you said you had especially interviewed a lot of people in the syndication world. Tell the audience who all you're interviewing.
Yeah, most certainly. So typically interviewing anyone coming across any different asset class. I mean, for me, I'm just so interested in all of them. And I think that speaks to myself in investing in 4 different asset classes. But I mean, really just interviewing and talking to different folks, whether they're in multifamily, self-storage, mortgage notes, obviously triple net lease, trying to talk to folks and understand the mobile home park space, trying to learn more about it and potentially find an operator where I can invest in. There, haven't come across anyone yet that does non-accredited, or if they, or on the flip side, if they do non-accredited, the minimum is pretty high. It's like 100K, 250K. That's just more than what I want to invest into one specific deal at this time. So different things like that. But yeah, interviewing people and like even talking to people that own laundromats, like, and they, similar to real estate investing, but they own these laundromats. So it's like a part business, but part real estate at the same time, talking to people where they just do these all assisted living as an example. Like that's another interesting asset class. So yeah, just talking to different people on where they're investing. Cause I could talk to one multifamily investor and their specialty is say Florida, Georgia, Texas. And I talk to another one and they're Indiana, Michigan, Ohio, 2 totally different locations, 2 totally different spots, and just interviewing them like, why do you invest in this specific market over a different market? Why do you invest in Class A over Class B? Just different things like that. And then I find that depending on the market, is it more of an appreciation play or is it more a cash flow play? If it's, why, if it's just cash flow, why should I invest with that? If it's more equity, why should I invest with that? I think equities, it's become a little bit harder, I think, in more recent months and last year. Just it's a little bit harder to do that forced appreciation, just given how everything was. So I think for me, it's more looking at the cash flow play where, yeah, if the building goes up in value, that's a nice play. But if I could get, a decent set of cash flow coming in right now, which is nice. And so I find just talking to all these different investors from all over the country, just learning about them and finding, I don't know, just finding them fascinating. I think every investor has a new story to tell, and I just enjoy talking to them and learning all about their different investments. And you start to just unpack these different asset classes that you didn't even know you can invest in. Like I was talking to someone where they own a winery in Texas, and you can invest in their vineyards. So it's like, wow, I never thought about that. And then I come across like a bourbon investment company where you can invest in barrels of whiskey, and it's like, I mean, we're talking like a 50K investment, so it's not on the lower end like you might see on some of these platforms where it's like $500. It's like this is a real investment. Even one where it was like a life insurance settlement company. So as an example, what they do is you have $1 million policy, they'll buy the policy from you for 800,000 per se. So then obviously when you pass away, they are the rightful owners of the $1 million policy. They paid you 800,000. They get, a nice return on their money. I don't know exactly how they do it. I'm sure they have to use actuaries and different things like that, similar to health insurance and how they go into that space. But it's like, wow, like I never knew I can invest in a company like that does that. And then obviously you get your car washes, your ATMs. I mean, there's really no shortage of asset class. I mean, if there's something you want to invest in, I mean, horses you could invest in. It's pretty crazy, all the different assets. And that's why I love interviewing people and just learning about all the different asset classes. Because I think on the surface level, people might think, oh, you can only invest in apartment buildings, which makes sense. I think people usually default to that, and that makes the most sense, but not realizing that there's all these other different asset classes out there.
Yeah, no, I get it. I was an appraiser in the 1980s. And so I like a lot of asset classes.
Hmm.
But also that was during the savings and loan crisis. So I got a little chicken about new development. A lot of banks were shut down and a lot of developments were shut down because the banks were shut down.
Mm.
And it wasn't always that the development wasn't fine, or was in trouble. It wasn't always that. So I've been slow to get into development, but we are way behind on housing. And
Hmm.
so, but it all depends on location. You got to pick the locations, right? And the team, like you say, if you have the best property and the best plan, it doesn't matter if you don't have a team that can implement it. So that's in my book the most critical of all. So yeah, it's fun to learn about all the different asset classes. So I'm into a few. I'm trying very hard to stay within my lanes. It's multiple lanes, but data centers is another one that I think has a
Mm.
ton of potential with AI blowing up like it is. So yeah, it's a brave new world out there, that's for sure. So what kind of an asset do you want to invest in next? Do you know?
Yeah, so I think for me, going to go, I would say cash flowing asset. And for me, I think that's if I could find a mobile home park operator, that's probably where I'd want to go. I haven't come across one that I mentioned, mainly just accredited where I'm not accredited, or that they just have a higher minimum. Again, I don't want to go 100K into any one deal. So I think outside of that, probably go back either. I probably wouldn't do the mortgage note just because I made another investment with them back in February, but maybe the triple net lease opportunity if they have another. So I invested like their fund one. So if they have another, I think they had a second offering of a couple of buildings, and then that, I don't know if they have a third one, but if they do have a third one, and I like it just from the cash flow standpoint, and it's very easy for me to say because I can look at the numbers and I can go, okay, if I, and I ran these numbers actually at the beginning of the year. If I invest 50K into a deal, whether it's one deal a year or whether it's two deals a year split up at 25K a piece, and I just get an 8% return. And if they compound every 7 years, I double my money just to make it simple. Based on that, I'll have enough income coming in from these properties, from these deals to cover my monthly expenses after 7 years. And so right now, halfway through year one, and seems to be going, since I calculated these numbers, I know I've been investing about 2 years now, but calculated them this year. So trying to look for a cash flowing asset that is going to produce at least 8% annually. Obviously, some of these deals out there, they're more equity play. So I think that's part of it. But I think right now I just want to get into another cash flow play. I think for me, I just want to get to that point where right now I have like between all these deals coming in, it's at like 600 a month coming in for cash flow. I expect to be in one more this year that would be at 800, and then I want to get into another one to be at 1,000 a month just coming in from cash flow coming in from that, and then maybe do another equity play. I just want to hit the 4-digit number coming in on these distributions and knowing like, okay, like our expenses are about 3,000 a month, but honestly it'll probably be even lower than that because we pay, so that's split between my wife and I. So that would cover my expenses. We each pay, our child's daycare is like 1,600 a month. So I pay 800, my wife pays 800. We just split it up like that. So that'll definitely come down when she's in about, I know we got a long road there. We got about 4 more years of her in daycare. She's just under a year. So it'll be a little bit while, but it's just trying to get these cash flowing assets. But again, I like when I'm looking at like a multifamily deal, if it makes sense, because the IRR is obviously going to be higher where it could be, say, 15%, but the cash flow is only 5 or 6%, depending on the entire time of the deal. But I get that nice appreciation and the equity at the sale of the deal. So I think for me, it's right now probably go more cash flow, and then the one after that would probably be more equity play. Just again, just want to hit the 4-digit number of the distributions coming through, just to mentally have that number, and then get into that next deal at some point that's going to be more equity. And I say, and what I mean by equity is like I'm in this self storage development deal where I invested in, I don't know, gosh, it's been like a year and a half now, or it'll be a year and a half before I get any distributions out of the deal. But they're building the self storage development units. They're already units on the spot, but they're going to increase the rents on it because they're like 250% below market. So it's a really good deal that I got into, and the goal is to get about a 2.5 to 3x equity multiple over 5 years. So obviously that's going to accelerate my money a lot quicker than a triple net lease deal where maybe I double it over 7 years, where the self storage I triple it in 5 years, but I don't get any distributions for the first year and a half to 2 years just based on how the deal is set up. So I think it's always just trying to juggle like, do I want to go cash flow? Do I want to go equity? And I find a lot of investors run into that same sort of problem. It's like, do I want to get more money in the long run, or do I want to have more cash flow now? And I don't think there is a right answer. I think it's just personal preference at the end of the day.
Well, and your financial situation. I mean, if you're making lots of money in your job, then you probably don't want more income. You want more write-offs, right?
Hmm.
So,
Yeah.
yeah, it's kind of situational, but yeah, no, I get what you're saying. And I think that the more that you meet the operators and what they like to do, they usually tend to have the same strategies. Then you can line yourself more and more with the operators that are doing the same. I too prefer cash flow. The refinancing that they were all doing in year 3, roughly, to give investors back some or all of their money is a great thing if you can really do it without spending too much money doing it.
Mhm.
But yeah, there's a lot of deals out there that are also stressed because they did the bridge debt, the floating
Mhm.
rate debt. And so that's why over the next 12 to 24 months, we're expecting some good opportunities to finally come by. And I'm seeing a lot more across my desk. How do you see your volume? Do you see more coming
Yeah,
now?
I definitely do. I think people are very cognizant of the interest rate more than anything else. And I find that that's like the number one highlight of the property is a lot of the times I find the deals I'm coming across where they're assuming a fixed rate loan. And I find that's been very popular where people are getting into these deals and maybe they're assuming the whatever the number might be, like 4% fixed rate loan for another, whatever the duration is left on the loan, maybe 10 years on it. I find that, or people are doing fixed rate for 5 years and then maybe it goes variable after that. Maybe obviously that's a little bit risky depending on what's going to be going on. But I think there's just so many, and it's almost like mind blowing to me how many creative ways you can structure deals when it
Yeah.
comes to real estate, especially I see a lot of just interest only for the first 5 years. And it's like, wow, I wish I could do that on my mortgage. That'd be nice. Only having to pay interest on it. But yeah, I think for me, I'm seeing a lot of the deals that are just more either people are coming in fixed rate. If they're coming in fixed rate, sometimes they might be coming in at that 7%, 7.5%. I mean, you got to really make the deal to work if you're coming in at that fixed number. But more often than not, I find there's just an assumption of the loan where they're just taking it over whatever the rate that had previously been there whenever the loan was taken out, so many years ago.
Right. Right. That's pretty common for sure. Well, very good. Well, so like I do with everybody there at the end, I like to ask you what is a pivotal person or event that's happened to either bring you where you are today or that's pushing you to where you want to be? Is there a person or event?
Yeah, most certainly. So there was this gentleman, and I met him through LinkedIn, and it was part of this networking group. And he had been a passive investor for a few years. And I remember I was early on starting about passive investing, and I was on a car ride. I remember my wife wasn't too happy because it was like a 3 hour car ride. And I talked to this gentleman for about 2 hours, but he just really pushed me to become a passive investor. And he was the one that gave me the goal to invest in January 23. And he was one of the first people that I had talked to. And he would check in about every 2 or 3 weeks with me. Hey, how's it going? What's the progress you're making? And he just held me accountable. And I found that was just very pivotal for me because it's easy to say, oh, I want to invest in real estate, but then you never do it because no one's holding you accountable because it's easy not to do. I mean, it's definitely, I mean, wiring $500 is not bad. But when you're wiring 25K into a deal, am I wiring it correctly? Is it going to where it needs to go? Is this person actually going to say what they're going to do? How do I make sure I mean, you do all this vetting on the back end, but how can you make sure that you trust them? So it's definitely scary early on becoming a passive investor for the very first time. So I found he was just pushing me and he would tell me about the deals and he would introduce me to different operators. And yeah, he just played a very pivotal role early on in just pushing me to become a passive investor. And I think without him, I don't know if I ever would have made that first investment where again, when someone's checking up on you all the time, you're like, I don't want to not do this. I don't want to disappoint them. So I found that was very helpful for me was sort of having that mentor. And again, I just met him through a LinkedIn networking group. I learned that he was a passive investor and I reached out to him on LinkedIn and was like, hey, I'd love to just talk to you, learn more about your passive investments. And then again, my wife and I were going away for the weekend. We had 3 hours to kill. I think I talked to him for about 2 hours on the phone. I think he was on a car ride somewhere else on his own end on a business trip. So it worked out good. But yeah, I found that just having that little extra motivation and someone to push me was very beneficial.
That's great. That's great. And I have on this podcast a special series called Local Legends and Pivotal People. So if you want to name him, we'll do a shout out. And if he wants to come on the show, he gets a pin and he gets special booyah. So do you want to say who it is?
Yeah, I believe I haven't talked to him in a little while. Unfortunately, I should say unfortunately, I should probably reach back out to him, but his name was Dave Leon. I believe
Okay.
he was out of Daveleon. I believe he was out of Texas or Arkansas, somewhere down south. I can't remember exactly where, but somewhere down south.
Okay, well, we'll do a shout out, but we'll leave it up to you if you want us to. You can tell him you nominated him.
Yeah,
Okay,
yeah, I'll definitely do that.
that really makes them feel good, and
Mhm.
that we would like to interview him if he's willing.
Yeah, that sounds perfect. Yeah, I'll definitely chat with him and see if he's open to it.
Yeah, that's great. That's great. So that's what we want to do is find those pivotal people.
Yeah.
So great, great. Okay, well, so tell people how they can reach you if they want to reach out.
Yeah, most certainly. So one, it could be through our website, just podcastingu.com. So that's just podcastingyou.com, or they can just probably the best way to get in contact with me directly would just be messaging me on LinkedIn, and that's just going to be under my name, Trevor Oldham. Pretty much always talking to different investors on LinkedIn, so always happy to connect there and have a conversation.
Super. Well, very good. Well, we'll put that in the show notes as well. Terrific. Anything else you want to add?
I think that's perfect. I really enjoyed my time today.
Well, good, good. I did too. Well, thank you.